Workers at a Georgia Hyundai plant describe a chaotic scene after an immigration raid at the facility. Federal authorities say Thursday's raid was the result of a months-long investigation by several agencies.
Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly.
Foreign car makers like Hyundai and BMW to be opposed to imports.
Hyundai, the South Korean giant that once turned Alabama and Georgia into proud symbols of global manufacturing, now stands dangerously close to retreat. What was once celebrated as a triumph of foreign investment in America is beginning to look more like a warning sign. The shock goes far beyond cars. It raises a deeper question. Is the United States losing its grip on the very companies it once fought so hard to attract? On the ground, the reality is bleak. Assembly lines that once roared at full speed are slowing to a crawl. Production schedules are breaking down. Shifts are being cut, and communities built around the promise of industrial stability are starting to hollow out. For thousands of workers, the dream of a secure paycheck has suddenly turned uncertain. In towns that depended on Hyundai's presence, the ripple effect spread quickly. Local businesses, from diners to auto parts suppliers, are already feeling the pain. Consumers have not been spared either. Hyundai once prided itself on affordability, but prices are now spiraling upward. Models that were once within reach of middle-class families now cost thousands more, driving buyers away. Dealerships are turning into graveyards of unsold cars, and the trust that anchored Hyundai's rise in America is beginning to fracture. The chilling question hangs in the air. If a powerhouse like Hyundai can't withstand these conditions, what chance do smaller players have? And if Hyundai really does walk away, who will be the next to abandon America's so-called industrial heartland? Just when it seemed the cracks in Hyundai's American story could not deepen further, a single moment pushed the entire operation into paralysis. The blow did not come from competition or consumer trends. It came from Washington's immigration crackdown. In Georgia, Hyundai's highly anticipated battery plant expansion was brought to a sudden and jarring halt. Federal agents stormed the site, detaining 475 workers in what became the largest immigration raid ever carried out at a single U.S. workplace. Overnight, the factory floor went silent. Construction timelines collapsed. Contractors froze their operations. Supply schedules unraveled in real time. This expansion had been billed as a project that would secure Hyundai's future in America, but instead it became a symbol of fragility. Many of the detained workers were legally present on short-term visas, yet barred from taking industrial jobs. The fine print of immigration law turned into a wrecking ball, tearing through one of the most ambitious clean energy projects in the South. If America's immigration policies can dismantle a billion-dollar investment in a single morning, what message does that send every other foreign company weighing whether to build on U.S. soil? As destabilizing as the Georgia raid was, the next blow came from a different front: tariffs. What began as a labor crisis quickly snowballed into a financial chokehold. By the second quarter of 2025, the numbers told a grim story. Hyundai's profits plunged more than 20% under the weight of Trump's 25% tariff on imported auto parts. What immigration enforcement didn't take away, Washington's trade war squeezed out for consumers. The impact was immediate and punishing. Sticker prices on popular Hyundai models jumped by $3,000 to $6,000, pushing them far beyond the budgets of the very families who once looked to Hyundai as the affordable alternative. Showrooms tried to mask the crisis by leaning on existing inventory, but everyone knew that lifeline would not last. Even Hyundai's Alabama plant, which enjoyed some relief through USMCA exemptions, found its advantages erased by the broader storm. Whatever breathing room it offered was nowhere near enough to offset the billions lost across the supply chain. With each passing month, the question grew louder: how much longer could Hyundai bleed before the exodus became inevitable? The damage extended well beyond Hyundai's balance sheet. It spilled directly into the streets of the American South. When a corporation of this size stumbles, the shockwaves ripple far outside factory gates. Thousands of direct and indirect jobs began to evaporate almost overnight. Assembly line workers faced layoffs, truck drivers lost their contracts, and local suppliers were left with unpaid invoices and idle warehouses. Even the mom-and-pop diners that served lunch to plant employees found their booths empty. For ordinary families, the pain showed up in showrooms. Cars that had once been affordable suddenly felt out of reach. Dealerships that used to buzz with activity turned eerily quiet, with buyers delaying purchases or walking away altogether. The auto market, once a proud pillar of regional growth, began to resemble a graveyard of missed opportunities. Perhaps most dangerous of all was a shift in public mood. In Alabama, Georgia, and across the South, communities that had once celebrated Hyundai as a beacon of industrial renewal found themselves gripped by anxiety. The narrative of progress was replaced by fear of collapse. If the industrial stronghold of the region could crumble this quickly, what did that mean for the future of every other company planted there? Hyundai's story in America is no longer just about a single automaker struggling with policy shocks. It had become a reflection of something larger, whether the U.S. can still provide the stability, workforce, and trust needed to hold on to global giants. Each raid, tariff, and policy shift chips away at that trust. And as the uncertainty deepens, the stakes grow higher, not just for Hyundai, but for the entire industrial landscape of America. What makes this collapse even more jarring is a bitter irony at its core. Policies that were sold to the public as safeguards or made in America are now strangling the very industries they were meant to protect. Instead of restoring confidence in U.S. manufacturing, they are driving it into a dead end. Foreign companies, once eager to pour billions into American factories, are suddenly holding back. The risks are simply too high. Rules can shift overnight. Enforcement is unpredictable. Incentives dangled today can vanish tomorrow. Boardrooms that once saw America as the safest bet in global industry are now treating it like a gamble they cannot afford to take. At the same time, the country faces a labor paradox it cannot resolve. Factories are desperate for workers, yet immigration crackdowns have severed the only pipeline capable of keeping production lines moving. This is not a simple shortage. It is a deliberate suffocation of the labor supply. Companies are left with no way to grow, even when demand is strong. The consequences have been staggering. In just a few months, billions of dollars in clean energy and battery projects have been shelved. Not because innovation failed, but because political headwinds made them impossible to execute. What was supposed to be America's leap into the future has instead turned into a stalled experiment, with experts sounding the alarm. The United States is not protecting its industrial base. It is boxing itself into a stalemate. And the looming question is how long before other nations step in to seize the ground America is abandoning, backed into a corner by forces it could no longer control. Hyundai began quietly exploring the exits. The once unthinkable idea, abandoning its American foothold, was now being modeled in corporate boardrooms. Tariffs, labor crackdowns, and soaring costs had pushed the company to the point where staying looked less like strategy and more like surrender. On the table were new supply chains stretching toward Vietnam and India. These weren't just contingency plans. They were deliberate moves toward cheaper labor, more flexible markets, and governments that promised fewer policy shocks. For Hyundai's leadership, the math was simple. Why absorb endless losses in America when other nations offer stability at half the cost? The symbolism cut deeper than the numbers. For decades, the United States sold itself as a gold standard for advanced manufacturing. But now, one of the world's largest automakers was treating it as expendable, a place too unpredictable to sustain modern industry. That shift in perception alone sent tremors through the investment community. And here lies a greater danger. If Hyundai set the precedent, what stops other global giants from following? Could one company's escape plan trigger a chain reaction that redefines where the world builds its future? Hyundai's struggle is not an isolated tragedy. It is a warning shot for the entire auto industry. The same forces battering Hyundai are reverberating across North America, shaking every manufacturer tied to cross-border trade and global supply chains. Asian automakers, once pillars of U.S. market growth, are reporting plunging profits under weight of tariffs. What began as a targeted policy against imports has ballooned into a systemic crisis, distorting supply networks that took decades to build. Shipments arrive late. Costs spiral out of control. Factories that once operated with precision are now running on uncertainty. For American consumers, the fallout feels relentless. Each disruption adds hundreds, sometimes thousands of dollars to the price of a new car. What was once a competitive market with affordable choices is collapsing into one where fewer and fewer buyers can participate. Families delay purchases, dealerships sit on unsold inventory, and one of the economy's cornerstone industries loses momentum, and in that vacuum lies another danger. If U.S. policy continues to erode confidence, the space left behind will not remain empty. Competitors from Europe and China are already circling, ready to seize a demand America can no longer serve. The question is no longer whether the U.S. auto sector is at risk. It is whether it can survive the global challenge now gathering at its doorstep. From Hyundai's faltering expansion came a brutal lesson for America itself. What was supposed to be a story of industrial renewal instead exposed a deep vulnerability. International investors no longer view the United States as the safe haven it once claimed to be. The land of opportunity is starting to look like the land of uncertainty. Capital is already scanning for alternatives, flowing toward emerging hubs that promise cheaper costs, steadier policies, and more reliable labor. Every dollar that leaves U.S. soil does not just weaken one company. It strengthens America's rivals. Instead of reinforcing its industrial backbone, Washington may be laying the foundation for competitors to rise in its place. The haunting question remains, if Hyundai is only the first to move, who comes next? How many more industries will quietly slip away before America realizes what it is losing?